Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, February the 10th. The year's 2020. Let's talk trading, right or wrong. I hear many people and I read many people talk about trading and they talk about doing things right, doing things wrong. Um, or it's like that. But the thing is, those are the wrong words. They're incorrect. They really don't describe trading very well. In trading, you either do something and it's either profitable or it's not profitable. Because in trading, it's pretty much about the results. But we don't focus on the results, we focus on the process. We focus on what we can control. Now, I was watching a video. Some of you may have heard in a few videos that I start shooting pool. I've started to shoot pool, a few times a week. And, I'm a fair shot. I'm nothing great. You're never going to see me on TV on a world championship. But because that's not an aspiration of mine. I wouldn't put in the time because you see, if you want to get really good, you got to put in the time. And that's true of trading too. So you have to put in the time. But the video broke down misses in pool very simply. The shooter said there's only two reasons why you miss. Either you didn't move the cue straight or your aim was off. Because if your aim is on and you move the cue straight, you're going to sink the ball. I mean, it's just that simple. And so it's almost the same thing in trading. You decide on a method or system, or you pick some indicator and you start to use it. And that there's usually some rules involved, and you follow the rules. So if you do all those things, quote unquote, if you do all those things right, um, then you'll place your trade, and it will either result in a win or profit or loss. So, but the thing is, you can do all those things in trading and have a loss. And that's okay. Because if you do all those things and you always win, then sooner or later you're going to own the entire market. I mean, if you think about it, if you had a system where you always win, why wouldn't you own the entire market? Because you would just pretty much risk everything on every trade. You just go to the maximum position size, you know you're going to win, and then you just increase it, then the next, so you make a profit, and then you just keep doing that, and pretty soon you'll have the entire market. But we know that's not possible. But somehow in our brains, we think that we should make money on each and every trade. Because I started the thread never lose again, but that doesn't mean you won't ever lose a trade. It just means at the end of a session or the end of some period of time, if you're doing things um, properly, you follow the methods, quote unquote, if you do things right, then you should show a profit. And the main thing you have to do right is put your risk management in place on each and every trade. If you go back to some of my earlier posts, say around early 2000s, you'll see where I said something like stop losses are for sissies. And the reason I said that was because I was using the buy zone method. And the stop loss was built in, because if you're in the buy zone area and you take a long and then price reverses on you and you get in the short area, well, common sense, which isn't so common, would dictate I'm getting a short trigger, so I should probably exit my long and go short. So if anybody wants to say go back, almost 20 years and dig out some of those old videos and go, well, Rumple One, you said not to use a stop loss. That was the reason why. But now, because I use other methods, but to tell you the truth, most of these methods still almost have a natural stop loss built in, and maybe I can point those out. But as you're watching these videos, boys and girls, I want you to remember one thing, fellow traders. These videos are for educational purposes only. Your results may differ from mine, and trading's risky. You can lose all your money. So if you're seeking trading advice, investment advice, financial advice, seek it from an accredited financial professional. Those people that have a certificate on the wall saying they're, a certified financial professional. They are an accredited financial professional. So if you lose all your money after taking their advice, you took the advice from an accredited financial professional rather than some guy with a funny name making YouTube videos, or somebody who posts on the internet somewhere, on a Facebook group or wherever. Okay, disclaimer's over. As you can see, all gaps filled this week. I believe in last night's video, we had a couple that hadn't filled. So you still had opportunity to take advantage of the gap fill for the week. Looking here, you can see the dollar yen's right back at the weekly open, daily open right here. So we'll see which way it moves from here. 96 pips above the yearly open and 60 pips off the yearly high. I just thought of something. What I just thought of was I could put how many bars ago the yearly high occurred and how many bars ago the yearly low occurred. I'll have to think that one through. Let me know if you think that would be a good idea. Okay, we're still working on the opening range for the week. I showed you that yesterday, and we're way above the opening range for the month and the year. So these right now aren't of any real concern. And we're right back here at that weekly open buy zone. So far, the month's range has been 171. So, and for those of you wondering, why don't I have the weekly range here? Rather, because we want to see the month. We look at the weekly range on another chart, but I could switch it over. But the thing is, from the beginning of the month or beginning of the week, we need to see, is there still more range to go on the month? Okay, and you can see here, we're 7 pips. Looks like we're 7 pips off the monthly, closed the low 138 pips there, and close minus low. And what is high minus close? We got 32. So you can see we're close to the high. And since we only have 162 pips and the average is 292, it looks like there's some movement to be had. Okay, we pointed out that there was this inside bar from 13 days ago. Price went in, it's dropped out. Good for 13 pips if you took that short. Here on the weekly inside bar, you can see if you took that trade here, you're only up a pip, but you had opportunity to take more. And once again, inside bar on the daily, there's just not that many opportunities at the time, but you still have plenty here on the weekly and on the monthly. Only 3 pairs with the range over 100 so far today. Just not that much movement, obviously. So in the Forex market, back in the days when almost every day the euro dollar was at 100 or more, you can see we're only about half of that. So rather than looking for those 20, 30 pippers, you might be looking for those 5, 10, 20 pippers. That's profit per trade. Okay, we hit the highest open 15 hours ago. You can see there was a few opportunities to get short off of that weekly H1 highest open, which is also the daily H1 highest open, but this is still Monday, so they're one and the same. We had already taken out the pivot here because it was in the buy zone. And you can see price is basically range bound at the moment, trying to decide which way to go. Not enough range for the rat zone. We can take a peek at the new beast here. As you can see, there's plenty of range here, 162 pips, and price has fallen below the up rat zone. Once again, weekly pivot I mentioned yesterday, 109.36. Look for price to possibly take out that weekly pivot. And we took out this missed pivot here from a couple of days ago. Actually, we took that out on Friday. So, but we still have a daily missed pivot here from 3 days ago. This one here, 185 days ago. Back in May 23rd. So, when we're talking about right and wrong, once again, there's really no right or wrong to be applied unless you just misread something or misunderstand something. I mean, for example, here with these pivot trades, we see where price open, we see where the pivot is. So in this case, price opened below the pivot on the daily, so we would go long. If you go short because it opened, you went the wrong way. Obviously, you didn't understand how to fade the pivot. You trade away from the open and toward the pivot. Here, very simply, these lines, we only have, 32 pips of range, but 32 doesn't fit inside of 10. So we open here between 60 and 70. Price isn't staying there. We open here in between 70 and 80. Price is not going to stay there. And so you can see even here, price opened here between 70 and 80. It took it a few hours, but price just will not stay between these two lines or any two of these lines. It just won't because of the range. So natural stop loss once again. If you go long here, then you would go short here. If you go short, so if you go long here and you go short here, then this would be the stop because the method's telling you to go short, and if you're long, you need to exit the trade and reverse. Simple stuff. Wick zone in and out, and we're in at the moment. See if price can escape that wick zone before the end of the day. As you can see here, no trades were triggered off of this method. Einstein line triggered short a few minutes ago, but really not much happening. You see that gap right there? Even on the 1 minute, you see how it filled? Those are things to look for. Price doesn't like to leave gaps. We've had about 3 or 4 pip movement to the downside here at the tick level. Here we've got the daily and weekly range. Right now they're one and the same because it's still Monday. Notice we hit that halfway point of the ATR and reversed. This is a nice place to take profit if you were long. And scrunching the chart down more, you can see where the weekly ATR zones, the lower and the upper, reside. So these will stay the same for the whole week. These two here will change each and every day. As you can see here, inside bar all the way across, daily, weekly, monthly. I can say that because if it's making a lower high and a higher low, then it's an inside bar. Looking at the high-low lines to be taken out, 63 at the bottom, 76 at the top. So that's it, fellow traders. It's not about right or wrong because it's not what you trade. It's how you trade it. Drain the banks. And don't forget to subscribe